when you invest in equities, companies on the stock market, what you're looking at is, okay, what are they doing with their cash? Well, okay, this company, kind of like what you were talking about before, this company's keeping their excess cash in treasuries or cash, and this company's keeping their excess cash in Bitcoin. And now it becomes a question of, what kind of company do I want to invest in? Do I want to invest in a company that's holding on to Bitcoin? So it's kind of like a derivative Bitcoin investment as opposed to just a cash.
Yeah, well, if you believe in Bitcoin, once you understand it, you would think, well, if they hold Bitcoin, their treasury is going up every year, 173% every year for the last 10 years. But you can plug in any number you want. Let's just say you thought it would go up 20% a year. Do I want to hold an equity in a company that has their treasury going up 20% in value a year? Or do I want to hold a company where their treasury is losing 20% of its value a year? And if you don't understand Bitcoin, then you're going to want the companies that invest in cash. But if you understand Bitcoin, you would want the companies that invest in Bitcoin. And there are a lot of ETFs that have formed where their express strategy is to find companies that have Bitcoin exposure on their balance sheet or their P&L and to invest in those companies.
So it sounds like a big reason why people haven't moved into things like Bitcoin is obviously inflation, things that we saw happen after the 2020 pandemic and crash. Are you worried then about the strength of the dollar and the long-term health of the dollar and I guess the US economy in general?
I think the dollar is going to continue to weaken, but other currencies will weaken faster. So the dollar is going to spread throughout the world. It's about 130 currencies in the world that float. Most of them are going to collapse into the dollar. And most of the world's going to dollarize. And so the dollar is going to spread. I think that we're in an inflationary economy. And if you're an investor, if you're an individual, or if you're a corporation or the like, then you need to adopt a balance sheet strategy where you invest your assets in scarce desirable properties. Either maybe you can buy securities, otherwise you buy properties, but you need to be invested in that. In assets that can't be debased. The losing strategy is to hold all your money in cash and lose 10 or 20% of it a year, lose 20% of the value of your assets a year in cash. The devastating strategy is to hold your money in a currency other than the dollar. Like in Lebanon, they lost 90% of all their wealth in the last 12 months. Right? In Argentina or Venezuela, they're losing their wealth faster. So the losing strategy is a weak currency. The slowly losing strategy is a strong currency like the dollar. A better strategy, a necessary strategy is I invest in assets. And the winning strategy, in my opinion, is levered long property, levered long assets. And that means I buy a house with a mortgage on it. And if I have a house without a mortgage on it and I could borrow money at 2.5% interest, I borrow money from the bank at 2.5% interest. And I either buy a diversified portfolio of stocks like the S&P index that goes up 10, 20, 30% a year, or I buy Bitcoin, which goes up faster. Right. So I'm basically borrowing money cheap. And I'm lending it expensively, right? I'm investing it and generating a higher yield on it. So that's what MicroStrategy's done. We, in essence, borrowed $2.2 billion at a blended rate of 1.5% interest, and we invested in an asset that's been going up faster than 100% a year. That's what I would do if I could, right? It's just a question of who will lend you money. I don't think it's a good idea to take margin loans. If you have margin loans, they get marked to market every minute. And if there's volatility, you might get forced liquidated. So that's not a good idea. But if you have long-term debt, 10-year, 20-year, 30-year debt, 7-year debt at a fixed interest rate, and you can invest it in a high-quality asset or high-quality property or high-quality business, then that's a wealth creation or a wealth preservation strategy that makes sense. Always has.
But are you worried about a potential economic slowdown and how that could then trickle down into the stock market and maybe the cryptocurrency market? We've seen the economy start to grow, but a big reason why the economy is growing is thanks to cheap debt thanks to stimulus programs. And as the stimulus go away and as interest rates go up, would that cause the economy to slow down, which would then trickle down to every other asset class?
Well, that's one of the reasons that I wouldn't buy equities myself. Like if you're buying stocks, like value stocks are valued based upon the discounted value of the cash flows over time. And so you get hurt two ways. One, the cash flows are getting discounted. They're less valuable because the currency is being debased. If you expand the money supply by 15% a year and you wait a decade to get the cash flows aren't worth anything. Right? So, right, money that you get in 7 years or in 5 years is only worth half as much as the money you get today in a 15% inflationary environment. So if you're investing in equity based on cash flows, then you've got inflation exposure. And the other problem is you've got economic, exposure, right? If the business underperforms due to cost, if their costs go up and they can't raise their prices.
Mm-hmm.
And how many companies can raise their prices 15% or 20% a year? And if your costs are going up 20% a year and you can't raise your prices 20% a year, you got a problem. So that's a problem with companies and equity and securities in general. That's a problem with bonds. It's a problem with stocks. It's a problem with real estate and REITs and commercial real estate and leases. Most leases have a CPI cap in them. You can only raise the rent at the CPI rate or less, or even they're capped out at like 2%, 3%. The reason that Bitcoin makes sense, and I'm not saying every crypto, the other cryptos they're just companies. You're betting, you're speculating on all the rest. Bitcoin is the dominant digital monetary network. It's different. The reason that Bitcoin makes sense is it's not valued based on cash flows. It's a non-sovereign store of value as a bearer instrument. There is no product. There is no cash flows. There are no quarterly results. There are no costs, right? There's no employees to strike. The cost of aren't going up. There's no supply chain to get snarled. There's no revenues. There's no cash flows. Bitcoin is a bank in cyberspace run by incorruptible software. For people that have neither the wherewithal or the inclination to form their own hedge fund, right? That's what Bitcoin is. You're just putting money in a bank. So if you're worried about the future, if you're worried about inflation, if you're worried about competition, if you're worried about corruption, if you're worried about taxation, you want to run to the least risky thing you can find, the thing that's hardest to corrupt, that's hardest to tax. What is the product of Bitcoin? When you buy a Bitcoin, you're buying 1/21 millionth of all the money in the bank forever. That's what you're buying. What will the product be in 1,000 years? 1/21 millionth of all the money in the bank. It's the same every year for 1,000 years. That's not the same with Apple Computer. Apple's got to change the iPhone. Google's got to change the product. Microsoft and other companies, Amazon, they got to change what they do. They have Nexus and employees, and they have regulators, and it's possible to put price controls on what they sell, and they can be unionized, and they can be banned, all sorts of things. Bitcoin just exists to be, right? If you're looking for the lowest risk place to go in an uncertain world, Bitcoin is the low risk institutional grade asset. So as I look out at all these risks, I say everything else you could buy is riskier. Bitcoin is the least risk. And that's why it makes the most sense, because every intelligent person is going to run away from those stocks, away from their real estate. They're going to sell their real estate. They're going to sell their stocks. They're going to sell their gold. They're going to sell their commodities. They're going to buy Bitcoin. They're going to sell all their altcoins and all their other random things because those things are risky and competitive and insecure and regulated. And Bitcoin is the least risky, hardest to regulate, hardest to tax, hardest to break, most universally desirable thing in the universe.
If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide that goes over what passive income is, how to start generating passive income, and different passive income strategies. These are things that you can start doing even if you don't have a lot of money. So if you want to read this free guide on how to start generating passive income for free, all you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.